Testing 1, 2, 3. This is Barry Zalma on insurance. I'm an attorney who has retired from the practice of law and now spend my time as an insurance claims consultant and expert witness and author and producer of these videos. Today I'd like to talk about the people who cause insurance policies to exist and who deal with people seeking insurance. To begin with, we start with the underwriter. This is the person who makes the decision to insure or not insure a prospective insured. And in modern practice, he's called an underwriter. But unlike the original underwriters at Lloyd's, the person with the title underwriter is usually an employee of an insurer who is employed to evaluate risks the insurer employer is willing to take. The original use of the term underwriter were the people who actually took the risk. And at the modern market of Lloyd's, they're still called underwriters at Lloyd's. The agent or broker retained by a prospective insured deals directly with the insurer's underwriter, or an agent appointed by the insurer to act as its underwriter. The agent and broker try to present the risk to the insurer and its underwriter best suited for the risk they are seeking to insure. The underwriter is the risk taker. He or she decides whether the risk presented by the broker or agent is the type of risk that the insurer is willing to take. Each insurer has specialized underwriters who look at risks differently and use their own criteria to evaluate them. They are betting their employer's money in accepting a risk, not their own. Then, if a risk appears to be appropriate, an underwriter will make use of a loss prevention engineer. If the risk the prospective insured proposes is large, he or she will often be visited by a loss prevention engineer. This person, employed by the insurer, is obligated to inspect the prospective insured's real and personal property and to interview him or her to ascertain that the insured and the property meet the requirements of the insurer, and upon proof to the risk inspection engineer that it can provide a recommendation to the underwriter to accept the risk. Often the risk inspection takes place after the insurance is agreed, subject to a favorable finding by the engineer. An adverse report may result in cancellation, rescission, or a requirement to improve the risk by, among other things, installing a burglar alarm or fire sprinklers, if the insured wishes the policy to remain in force. The loss prevention engineer should note, at the very least, the size, construction type, and physical condition of the structure, the risk of loss of which is the subject of the insurance applied for by the prospective insured, the protections available to the structure like burglar and fire alarms, sprinkler systems, deadbolt locks, fire extinguishers, security guards, and fences exist, the type of and value of the contents of the structure, the management of the business that occupies the structure, any hazards to fire, flood, windstorm, theft, earthquake, or other perils that appear, the records of the business occupying the structure and whether they will be adequate to establish the amount of loss if a loss occurs, the insurance history and loss frequency of the prospective insured, and any work that the prospective insured might have to perform to make the structure acceptable to the insurer's agreement to insure against the risk of loss. The loss prevention engineer coordinates and directs engineering studies and technical services within all of the recognized loss prevention engineering fields. He or she develops loss control methods, procedures, programs, and mechanisms to eliminate or reduce loss, identifies high loss potentials, designs controlled programs, communicates elements of the program to the insurer and the potential insured, and measures the effectiveness of the control programs through statistical evaluation. The loss prevention engineer has no power other than to make recommendations. If the underwriter agrees with the engineer's recommendations, he or she will forward them to the insured and advise that compliance with them is a condition of continued coverage. If the insured fails to implement the recommendations, most insurers will either refuse to insure at all or will cancel the insurance policy that was issued subject to a favorable engineering report. Providing services somewhat less than the loss prevention engineer is the PreRisk inspection service. If the risk is residential or a specialty type of business, the insurer will have it inspected by a specialized company called a PreRisk inspection service. Its inspectors are often experienced claims adjusters who understand the types of hazards faced by prospective insureds and their prospective insurers. The PreRisk inspection service seeks much the same information for the insurer as the loss prevention engineer, but is not supported by actual graduate engineers. In addition, it determines if there is any specialized information needed by the insurer because of the type of risk. The PreRisk inspection service will conduct a different inspection for a residence in a middle-class neighborhood than one in a wealthy neighborhood where the dwelling is filled with fine art and antiques. Likewise, inspection of a convenience store will differ from inspection of an antique store or a jewelry store. The PreRisk inspection service is versatile and entails much more active participation from the prospective insured than do the activities of the loss prevention engineer. After it completes its inspection, as with the loss prevention engineer, it recommends changes to the insurer. The insured will usually be required to make these changes as a condition of coverage before insurance takes effect, or if insurance has taken effect, it might be canceled if the insured refuses to comply with the recommendations. After the policy comes into effect, the insured should have no contact with the insurer except when it comes to renew the insurance or pay premium. At the time of renewal, the insured may see the same people he or she saw to acquire the policy or no one at all. If the insured has presented no claims during the policy term, he or she may merely receive an offer from the insurer to renew the insurance for a specified premium. The insured will either accept the offer or find insurance with another insurer at a better price. If the insured incurs and reports a loss that may be due to a risk of loss, the policy promised to indemnify the insured. Once a loss is reported, the insured will be contacted by the insurer's claims adjuster, who is employed to conduct a thorough investigation of the loss and claim. In the United States, and in California specifically, insurance is defined. The California Insurance Code provides the following definition. Insurance is a contract whereby one undertakes to indemnify another against loss, damage, or liability arising from a contingent or unknown event. Because insurance by definition must only provide indemnity against a contingent or unknown event, any pre-existing condition is not insurable. If that pre-existing condition, however, had been seen by a loss prevention engineer or a risk inspector, and the insurer continued the insurance, it may have a difficult time rejecting the loss as one that was not insured. A house, however, cannot be insured after it catches fire. A business cannot be insured against damage by earthquake after an earthquake causes it to collapse, nor can a person buy insurance against personal injury after he or she stumbles into another. Insurance is not available to protect against a loss that happened before the policy was purchased. Contrary to statements made by politicians, insurance is not a right to which all are entitled. Insurance is a profit-making enterprise where the insurer has an unquestioned right to choose who it will insure and can enter into agreements that specify the promises made by the insurer and the insured, and the insurer can rely on the representations made by the potential insured at the time a policy is sought by application. So, once an application goes from a broker to the underwriter and the inspections are conducted, a policy is issued. And it's issued based upon a reliance on the good faith and fair dealing of the insured. This video was adapted from my book, Zalma on Insurance Claims, Part 101, second edition, and is available as both a Kindle book and as a paperback from Amazon.com. If you found this video to be of interest or useful to you or your colleagues, please pass it on. It's free. And please subscribe or follow me on my Rumble channel, my YouTube channel, and my blog so that you can be advised of future videos and future blog postings. Thank you for your attention.